Hello and good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your morning session outlook. The North American markets first. NFP came out 40,000 worse than expected at 160,000. The unemployment rate came out as expected at 5%. The average weekly hours were as expected at 34.5%. The labor force participation rate 0.2% less than previous at 62.8%. The consumer credit change is 13.67 billion better than expected at 30 billion. That's nearly twice higher than the consensus. In Canada, the unemployment rate is 0.1% better than expected at 7.1%. The net change in employment in Canada is 2.1 thousand worse than expected at negative 2.1 thousand. The participation rate 0.1% less than previous at 65. And the IV Purchasing Managers Index is 7.3 less than previous at 50.6. And the seasonally adjusted data is 0.6 better than expected at 53.1. The Dow Jones is 10 points up on Friday. The Nasdaq 36 points up on Friday. The Dixie is at 93.95. The USD Canadian dollar had a 55 pips up movement against the Swiss franc, 45 pips up. And the events that we're having for today are one from Canada, housing starts seasonally adjusted year on year, and from the US labor market conditions index. The most important event from the North American markets will be the retail sales on Friday. It could also have an effect on the gold. Alright, on to the European markets. There were no events on Friday. The Euro area and the International Monetary Fund will meet today and assess whether Greek Prime Minister Alexis Tsipras has made enough budget tightening commitments to gain another aid disbursement. The DAX 30 was up with 110 points on Friday. The CAC 40 was up with 23 points. Biggest mover with currency pairs is the euro against the Australian dollar, up with 229 pips on Friday. Today we'll also be awaiting the Swiss Consumer Price Index data month on month and year on year for April. Alright, on to the UK. The sterling lost 1.2% in the week ending on May 6 after data from manufacturing, services and construction showed that the economy has slowed down more than the expectations of analysts. The pound had its biggest loss in 6 weeks, and in the week to come, bearish traders will be focusing on the data the Bank of England will unveil this Thursday. With the Brexit considered less and less of an option, investors will return to a more normal data-dependent attitude towards the pound, meaning they'll be looking at the calendar. The FTSE 100 gained 54 points and closed at 6,114 on Friday. The 10-year gilt yields closed at 1.48%. The GBP Australian dollar was the biggest mover, 195 pips up on Friday, 345 pips range. Huge profits there. For the week, we're expecting the Super Thursday, of course, along with Mark Carney's speech. For Tier 2, manufacturing production, industrial production, NIESR GDP estimate, RICS housing price balance, and Bank of England quarterly bulletin. Alright, on to the Asian and Pacific markets. We had Chinese data. The trade balance came out 5.56 billion better than expected, which is good. The imports year on year 5.9% worse than expected at negative 10.9%. The exports year on year 1.9% worse than expected. The trade balance overall is 103.4 better than previous. In Japan, policymakers at the Bank of Japan are confident that the country's economy is recovering, but some warned of a continued slowdown in consumer inflation. This is what the minutes of March 14th, 15th showed today. The Bank of Japan voted to keep monetary policy unchanged as officials decided to hold off on any additional surprises that could spark additional volatility in the domestic and global markets. A government representative at the meeting called on the central bank to better guide the market on negative interest rates, which policymakers adopted in January to the surprise of many in the investing community. On Friday, Kuroda will be holding a speech as well on that topic. In the Pacific, the Australian dollar faced heavy selling pressure after the Royal Bank of Australia unexpectedly cut the benchmark lending rate to 1.75% and subsequently hinted at further easing on the horizon in its monetary policy statement. The currency suffered the largest weekly drawdown in a month, returning back below the 0.74 figure against its US counterpart. The economic calendar thins out in the week ahead, leaving the Aussie to digest recent volatility. Broad-based worries about the pace of global economic growth appeared to become more acute last week. Alright, last sector for the day, commodities. The Baker Hughes oil rig count, it fell by 4 to 328 for the week ending on April 29th. The rig count has moved lower in each of the last 7 weeks. Gold jumped 1% on Friday after US non-farm payrolls data for April came in weaker than expected, boosting expectations. The Fed will delay further interest rate increases. And crude oil prices gained smartly in Asia on Monday, with disruptions to Canadian output from a devastating wildfire and a switch in oil ministers in Saudi Arabia gaining attention. Saudi Arabia, which of course is the world's largest crude oil exporter, on Saturday appointed Khalid Al-Falih, chairman of the state oil giant Saudi Aramco, as its new energy minister, replacing Ali Al-Naimi, who had held the post since 1995. The Financial Times said the switch is part of a broader plan to modernize the Saudi economy away from a reliance on oil as a mainstay. Gold had a range of $19 down to $12.84 now. Silver had a range of 28 cents at $17.41. Crude oil had $1.80 range up to $45.46. Natural gas is trading at $2.08 at the moment with a range of 6 cents. That was all for today. Thank you for the attention. I will see you next time. Goodbye.